All right, traders, welcome to today's recap. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, April 5th. We've got one more trading day of the week. Tomorrow's Thursday. I call it Synthetic Friday. You'll hear me say that stupid joke tomorrow. Risk disclaimer in front of you. Everything that we're going through is for information purposes only, not giving out any advice or recommendations. Please read the full risk disclaimer here. So a lot of developments. Just to kind of go over what we discussed yesterday. One of the, yesterday was a long video. I will try to make it a little bit shorter today, but I think definitely one of the things to pay attention to is noticing what we're seeing in terms of the economics, as well as some of the other reports that are coming out. I'll go through those with you in just 1 second, but just to rewind in case you didn't see my video yesterday, but I talked about the latest batch of economic reports that have been coming out have been weak. This was on Monday, and again, it's kind of pretty quickly that we've been seeing this. I tend to focus on more of the leading indicators versus the lagging indicators. So, and by the way, price is also one of those leading indicators. So of course, price is the most important thing to me, but I do look at some of these things like the ISM manufacturing, which came in lighter than expected, 46, which again, below 50 is contraction, above 50 is expansionary. We also had yesterday, we had the factory orders, we had JOLTS jobs openings that were showing less job openings. Factory orders were lighter than expected. Durable goods were negative 1%, not a good number. And then we had today, which I thought, which is what I discussed in yesterday's video, that the ISM services I thought would be an important number, along with these PMIs, but I really was kind of focused on the ISM services number. Still expansionary, but not by much. 51 missed this high estimate. I don't know why why they were looking for such a big number, but they were, and the estimate was 54, came in at 51. So for now, if you notice the price action after some of these data points hit, it's the bad news is kind of bad news right now, and you're starting to see all type of sector rotations based on that. For example, yesterday, right, when these numbers came out yesterday, the reaction, and things were kind of already going that way, but you saw the industrial sell off, you saw steel names sell off, metals, materials, like anything cyclical, really sold off hard yesterday. Today was kind of, and we talked about kind of the different sectors and how that would be, and kind of growth stocks in the middle of that a bit. And so when this number came in today, the market just continued to kind of do what it was already doing, which was a bit weak. So for now, that's the case. Bad news is bad news. I mentioned that there's a couple other things too. Well, we just got Costco numbers, right? They're kind of an indication about what the customer is doing. Notice Costco doesn't miss their sales too much, and they did. March comp sales down 1.1%. Sales ex gas slightly up, but again, the numbers for Costco are usually much better. I wish I had a chart of these. I'll try to find it after I'm done with the video, but it's kind of, that's interesting. And you could see cost is down quite a bit. They're down, they close at $4.97, so they're down $18. So you can kind of add some of these pieces of the puzzle together. Another one that I was talking about earlier was the truck orders. Now, again, this is a little bit, again, I'm not an expert on any of on this report or really any of these reports. I just kind of use them. I try to use them to my benefit, but you also have truck orders falling as well. So all of these things are not really not painting such a good picture about the economy. Now, I've been in this camp for a while that, make sure, because we've heard about the possible recession for probably at least a year at this point. It's like the boy that cried wolf, if you guys remember that old story. But it's kind of been the same thing. Like every month there's a recession coming. So, we've heard that now for a month. And so one of the things that I've said over the last year is people have been, have adopted that doom and gloom, is to go outside, go to restaurants, go travel, see what it's like. So I think like this is kind of one of the first like real times that I've felt like seeing some of these numbers come out that, hey, we do have some softening that's going on. And, I was just on a trip to California, and, the airlines and the airports are super packed still, but it may take a little while to kind of filter through, for traveling, because people obviously do book trips in advance. But something to kind of just take note of. Also, so just like yesterday with the sectors, right? If you look at what outperformed for the day, I mean, it was really a lot of defensives. And a lot of these defensive have been pretty beaten up. Utilities had a huge day, up 2.6%. Healthcare names up 1.7%. And I've kind of been wondering, I like to trade the healthcare names because they're easy to trade. I think they don't move quite as fast normally as like the high growth names and so forth. But this really got oversold and has now finally gotten back. But this is still a really tough chart, even after such a 1.7% move, where S&P was down for the day, really nice outperformance, but this is still tough. So I think you have to go one by one. If you caught this move today, obviously Johnson & Johnson was a big story for the day too, that stock moving up to the 200-day moving average. But, again, this is one of those charts where, and it's, I think, like the same thing with Pfizer too, that there was just so much weakness and so unloved that sometimes you could really see that with a group. And I think same thing with the utilities, right? We're now seeing this move in interest rates. Yields are finally coming in a bit, right? Let's look at TLT, which I think I did yesterday, right? TLT is trying to break higher here, right? So of course, when TLT goes higher, that means interest rates go lower, right? That's how a bond works. So you're starting to see that take place, whereas bonds rally. That's all. So you've like two things working with those defensive trades. You have the interest rate implications, and you have what's going on with sorry, let me say that again because I just lost my train of thought. You have interest rate implications, and you also have, what's going on with the economy and maybe people rotating into some lower volatility areas of the market. But here's what yields look like. Just if you want a viewpoint on this, the 2-year is down to 3.78. Just again, remember where this was. If we just want to look at what the 2-year was, remember this was at 5%. So we're at the lower range of where we've been. I mean, just that's a remarkable move from 5. I hope you locked in something here for the 2-year auction. We were talking about that about a month ago, that 5% is a pretty good rate to get in a 2-year bond, and now we're all the way back to 3.7. So yes, those defensive areas become a little bit more demand, right? And again, there's this seesaw type effect, right? Nobody really wanted to own many of these utilities, and again, I still think this is a very difficult chart. You're better off perhaps looking for some individual names, but that's one heck of a move by utilities, up 2.6%, right? And moving back into that sideways 200-day moving average. So, what are some things, and I played, going back to healthcare, I played I was looking for that similar nice move off the bottom, which this was a nice move, and I caught this move today. This is Cigna, up 3.6%. I kept a little bit of the trade on for today, but of course UNH is the big name in this group. Aggressive move back up to the 200-day moving average from 480 to 509, and I like this chart, the Humana chart. Right, it's a little bit better, a little bit more relative strength because it's above the 200-day moving average, and you could target that virgin point of control up here, this overhead supply up here, 531. Again, whenever you see these red lines on the chart, that are above the full red lines, right? You just saw one, that I showed you in the XLU ETF, right? It just took out one of these. Oh, it didn't take it out, but it's close by, right? That's overhead supply. right? And that's a high area of volume that we haven't revisited. So a lot of times we're going to stall there. Let's talk about the indices for a minute, because clearly that has happened with the Qs, right? That was an upside target, and you could see that we're now, after we've taken out that level, after that big buying pressure towards the end of last week, we're in digestion. So there are, going back to growth, which I'm going to go over some signal names. But you're like, there could be some opportunities here because names are checking back a little bit after getting overbought. Remember, this was something that we've been talking about too the last couple of days, is the McClellan oscillator too. This hasn't updated. This is from this morning, but this got really overbought. Here's the line. So we were really overbought. And I think that if you just paid attention to the price action too, you didn't need an oscillator to figure that out. So things really got overbought. And now it's the question is, after some overcrowded areas like we saw in growth towards the end of the week, and a little bit of profit taking, are we going to see those areas continue to lead? Because most of the names that I talked about are not really, they're not leadership areas. They're just kind of, it's a reversion back to the mean. But you could find, it's one other point that I wanted to make about the defensives is that I know some people are just growth traders, right? But I think that if you can manage to kind of look at some other areas, like I do this all year long, where sometimes we see strength, and we saw months ago we saw strength in the utilities, right? And there's opportunities. You can sometimes just have to cover up the ticker because some people just get fixated on growth stocks. But the moves today and catching a trade or two in some of these defensive areas can really help a lot. While maybe your bread and butter names, if they're growth, while they digest a little bit, right? Apple was one of those names too that did take out an upside level, right? Apple was so strong, but I think that trade's over for now. Now, again, it may hold in there, but that's a big upside level. So it wouldn't be surprised me if this consolidates for days or weeks even, and then maybe, of course, has earnings coming up. So that's probably going to be the catalyst for this name going forward. Also, the semiconductors, right? They got a little bit overcrowded, and they're checking back here. They're down 1.8% today. They underperformed for the day, but again, they've worked really well over the last couple of weeks. So of course you have profit taking. All right. So I mentioned some charts that I was going to watch. Well, I just want to cover a couple other causes for concern, because it's a very interesting market that we have right now. We are basically, we've got some areas that do not look healthy, and I don't really have the answer yet to see how this is going to shake out. For example, the microcaps, right? Everybody always gets into this discussion of bull market, bear market. It really depends on the area of the market. There's some areas like this. This is a bear market, right? This is clinging on to the low, multi-year lows, right? This is not bullish looking at all. So it needs to hold here. If it doesn't, you're going to see more multi-year lows, and that's 91.40 would be about 10% down, where the next real big support would be. So this is not a bullish chart by any means. All right, so it's something that you kind of have to factor in. Of course, the banks, which kind of goes back to as well, seeing the banks like this, what are the chances that they're going to raise interest rates anymore this year? I know that we hear Fed speakers here and there talk about, oh yeah, we need to keep the interest rates up here and so on and so forth. There's, in my opinion, I don't think you're going to see any more rate. By the way, here's the breath for the day. But I don't think that you're going to see any more rate hikes now that the economy is softening. And you could see, right, even though they're still implying like a 47% chance that they raise interest rates in May, I find this very hard to believe that they're going to be raising interest rates anymore. If you begin to kind of look out a few months, right, the market is now pricing in, if you go to the end of the year, net, maybe 3/4 of interest rate cuts at this point. So that is becoming more apparent, right? And again, we're going to get more economics that come out that may kind of either strengthen the picture of what I just mentioned about weak economics, or I should say reinforce that, or maybe it's you get something different. We'll just kind of have to see how that goes. So this is not good. And I can't believe that the Fed would want to raise interest rates as the banks are moving lower like this and clinging on to the lows so far of this year. So in any event, that's my opinion. If you disagree, that's fine. That's what makes a market. I mentioned I would go over a few names. So I did trade, I did add to my position. I took some profit targets up here in AXON. And I added back to this today. So yeah, so this is one that I traded. A couple other names too that caught my eye. Palo Alto, checking back to the top of value. So I would watch, you could write down these levels. Again, this value area is significant. Why are the value areas significant? Because they're based on the volume at price of the last period, which is March. So we're coming back, and this is roughly one standard deviation of all that activity. So notice that we came in and checked back to that. So that's going to be very interesting. All right. Another name that people like in growth is Melly. All right. Ticker symbol. This is a tough name to trade. Let's see if I can get Thinkorswim to cooperate for a minute. All right. But you also have 1238. Right, so that's basically given back a lot of last week's move, but let's see if it holds here, or 1239. All right, for Melly. So nice check back. It's been making higher highs, which is what you want to see in a trend. Also, the lows have been, higher lows. So this would be a great place for this to see if it can hold in here. Another name that I actually sold yesterday, which was Alta, and I'm glad I did because it was down $12 today. But I'm actually looking, this is on my radar for tomorrow, right? Checking back into that breakout zone, which is 527. Now, again, it could spend another day down in here. I think being patient, right? It's still the beginning of the month. It's just the first week of the month. So be patient with this, let the price action come in. It's also very important just to talk about trading for a minute. Like I got caught in a couple trades. I went long some Roku. I tried Roku yesterday as a day trade. It didn't work. I actually went long some Roku before the end of the day and I lost money on it. But the important thing is, to not really get too beaten up while the market is doing this. And again, it happens getting caught in some trades. But the main thing is don't put too much of a dent in your P&L and don't give back. If you made a lot of money last week, don't give it back. I mean, it happens sometimes. And, for me, it's just giving back a little bit of that P&L, but make sure it's not that you're not giving, a lot back. So, adjust your position size. The last couple of days, the breadth has been bad, and we're going to need to see some buyers kind of come in and step in. It'll be interesting if that's tomorrow. What else? I think I had one or two other names too that I had in my charts that I was looking at. I feel like there was one more. Maybe ELF is another one too. It hasn't really come in enough, I think, but maybe something to watch, on your radar. All right, guys. So that's basically it for today's recap. We'll continue to kind of look for some things in the defensive group. I mentioned Humana, Cigna, which I'm still long a piece. But I think there might be some other opportunities there, which we will go over for members and provide some charts. So yes, if you're not a member, you can go to tribecatradegroup.com and you can get involved, and see how we go through and analyze the market, as well as provide trade ideas in things that have decent setups. One other note, last thing I was going to mention, and maybe this is a little bit of a positive, as we're going through this, and by the way, this is quite normal to see the profit taking after, a huge up week last week. But the VIX isn't really spiking on this. The VIX actually touched 20 today and moved back below. So that's one small positive is, as we're seeing this sector rotation, And you know, the market's kind of adjusting to this. We're not seeing volatility spike up a little bit. So for now, you know, I kind of just continue to observe things. I'm not, you know, super bullish. I'm not super bearish, but I'm just noticing what's going on in this marketplace, which can really kind of help formulate a strategy. Guys, have a great night, and I'll see you tomorrow.